I'm still super focused on the time horizon of right now is where I think the business cycle sweet spot lies, which is growth recovers, inflation remains low, and it starts supercharging my secular themes, which are technology and crypto. Both benefit from debasement of currency, the added liquidity, but in addition, there is this exponential age of technology that's playing out, and the adoption effects of that, of which probably AI is the fastest, but it may not be. Who knows what else is coming? There's a lot coming. The robots are coming fast as well. We've got lots going on there. And then crypto, which is actually part of the same thesis, has been on fire as we've got, the ETF flows driving things. But really what that is all about is adoption. So we've got new technology adoption, which has been growing in a secular trend. And then it gets exponential every time you add the business cycle to it. So I'm really, really hyper-focused on that. If I look at, and just to tie in something Angus has looked at as well, I've gone through kind of every market versus debasement, this dividing things by the Fed balance sheet. I think Geordie and Angus, I've shown you this before, this you divided by the Fed balance sheet. There's only one emerging market that actually comes out to be growing, which is, again, on the same basis of demographics and deflation, is India. So you've got, a very limited emerging market set that's really working and a very limited set. But those three markets alone are giving you enormous returns. So I'm super focused on that.
In today's video, Vision CEO Raoul Pal updates about his outlook for crypto in 2024. Raoul also breaks down the inflation and debasement of currency and how technology and crypto will benefit from it. He also predicts the future adoption of AI and robotic technology, and how it will outperform everything we know. So, without wasting any time, let's dive into the video.
So let's say you're right, is that people don't value businesses correctly anymore, and Geordie's right that, let's say, the business cycle is structurally shifted. That sounds like it's going to be an extremely positive backdrop for markets that most people don't understand. Last year was a typical market where nobody understood what had happened. But really what you're talking about here is kind of a change in how people approach markets and economies, and people haven't got to that understanding yet. So maybe that's one of the reasons the markets were so ludicrously strong last year. You just need the Fed to take its foot off the neck of the market, and before you know it, this kind of beach ball shoots out from underwater because things have changed.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now.
We grew up in a world where businesses were financed by debt. The General Electrics of this world and all of these, they were debt-financed businesses, and interest mattered. Basically, the entire leadership of the S&P 500 has never had a single debt in its life. Or if it does, it's just for cash flow management purposes. And they're all equity-driven. Everything is equity-driven now. If you think of, all of the VC business, that used to be your local bank. You'd have to beg and say, I'm setting up a new business. Now we call it a startup, and a startup actually means equity-funded thing. And therefore, maybe the business cycle matters less. Angus, what are you seeing? Because a lot of the tech companies, stuff like that, there is a difference between people who borrow money and people who don't.
Bitcoin has experienced a notable increase in ETF inflows, accumulating a significant amount of $233 million in total. This increase, as an indicator of the funds flowing into Bitcoin ETF, signifies a significant surge in investor interest. Despite the inherent volatility of the market, Bitcoin has managed to maintain a relatively stable price level and consistently fluctuates around $51,000. BlackRock, one of the world's largest asset management companies, made a significant investment in Bitcoin ETF, contributing a striking $168 million. This substantial entry underscores the growing institutional interest in Bitcoin as an investment vehicle. BlackRock's decision to allocate significant resources to Bitcoin ETF is a sign of broader acceptance of Bitcoin's potential as a store of value and a hedge against inflation. Similarly, another leading investment firm, Fidelity, demonstrated its confidence in Bitcoin's long-term potential by contributing $53 million to Bitcoin ETF inflows. Fidelity's participation in Bitcoin ETF further confirms the increasing acceptance of Bitcoin among institutional investors and emphasizes it as a legitimate asset class.
I also think businesses will rise and fall much faster. Like, I was using recently Otter AI to do, when you're on a Zoom call, it transcribes it, gives you some notes. Zoom, we started using the Zoom one, it's like 10x better. That's the end of Otter. And we're seeing this happen at a scale because people are now using AI to build the AI, to build the business, to build the AI. And it's like hyper fast. I'm worried that venture capital will never be able to capture money in this environment. Sure, in some areas, of course, but in some of the really fast-moving areas, we've seen it in blockchain. It's been really hard. An ICO market seems to be more effective because it can trade for 6 months and be worth a lot or nothing, and it's okay. But I'm not sure the VC survives this.
Do the hardware?
It's almost
I'm
like
reading a random book that both of you probably enjoy, and you wouldn't think you would, is Yanis Varoufakis, the kind of Marxist intellectual economist.
Yeah, Greece.
He's got a book called Techno-Feudalism, and it's bloody interesting because his view is these platforms like Amazon, Twitter, Apple, all of these, they are now a feudal-based system. They're not capitalist because it's all rent-taking. So you're a rent-taker in the middle of the system, and if you want to operate in that world, the feudal landlord takes his fees. And I think it's the same in tech hardware. That's where it's going, is like, there's literally the barriers to entry are so high, it's almost impossible, of which Taiwan as a country has a barrier to entry so high, it's almost impossible to deal with, that they become feudal landlords of the hardware. It becomes very interesting, and maybe the serfs in the bazaar trading things are all of the software companies in the end, when it used to be a software-owned world. There's something shifting here. I don't know what it is.
Will the Bitcoin halving create overnight millionaires? The hype around the halving is already building, but will it really play out as many investors expect? The market had already priced in the effect of this move. In the 6 months from June 2023 to January 2024, the price of Bitcoin soared in anticipation. Thus, when the news finally came, Bitcoin's prices actually headed lower, not higher, as many people had thought. As it turned out, the preliminary gains were a bit too optimistic in the short term. So, could the same thing happen again, this time with the halving? At the end of last year, some analysts were already starting to predict that some of the halving impact had already been priced in. This makes sense, given how much attention Bitcoin now has from Wall Street and big institutional investors. The halving is no longer a surprise event for them, as it might have been back in 2012, 2016, or even 2020. It's a highly predictable thing with several cycles of historical precedent, and the crypto market is no longer as inefficient as it was just a few years ago. Even if you think that the halving will have a significant impact on the price of Bitcoin, just remember that the price gains after a halving usually take 12 to 18 months. Consider the past halving. It took place in May 2020, but Bitcoin didn't reach its all-time high of $69,000 until November 2021, a full 18 months later. As a result, don't expect a sudden jump in the price of Bitcoin from its current level of around $50,000. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. Not know why you haven't subscribed yet? If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.